Welcome back. Anthony, obviously great every time I see that. He got out of the rabbit hole, hopefully. I think we're going to have him back for a shipper update a little later. Hopefully we'll ask him if he's out of that rabbit hole. Right here, I am here with Sahej Singh. He is the Director of Business Intelligence and Strategy at Reliance Partners. Sahej, thanks for joining me this morning. Let's talk a little bit about your role. I think this is a good friend of mine, by the way, everyone, and I'm excited to have this conversation with him. But I do want to talk a little bit about your role at Reliance, and then we will talk a little bit about some of the things you're working on and the challenges and benefits of it. But what do you do as your role as the Director of Business Intelligence and Strategy?
Yeah, so I love what I do. Reliance is one of the fastest growing, actually it is the fastest growing privately held property and casualty insurance agency in the US. A lot of what I do is around growth strategy. I focus on the agency's insurtech strategy. We have a few initiatives going around proprietary technology, a few initiatives around machine learning and predictive analytics as it relates to risk and risk pricing. And then most recently also starting to spin up and grow our usage-based insurance segment, which is really cool, very innovative on the underwriting side as well.
Okay, that is what we're here to talk about. So this is usage-based insurance. Let's start from a very high level. Explain it to me like I'm five. What is that?
All right, well, insurance in general, if you think of the quote unquote traditional way that insurance is written, it's typically written on an annualized basis. So it's, you're paying for the year. And what we've noticed, let me give you an example. You have refrigerated trucks, and you're typically hauling, let's say, fresh fruits, right, as your main commodity. And all of a sudden, 2020 hits, there's a globalized pandemic. And now those refrigerated trucks now need to be used for the vaccines and medical supplies, right? So your cargo limits, your typical cargo limits may or may not apply. And that's when excess cargo comes in, for example. Now, you don't want to pay that excess cargo for the entire year because typically you're hauling fresh fruit, right? But you do need it for certain loads. And so what we're enabling, not only on excess cargo, but we're doing primary cargo, excess cargo, LTL, both primary and excess, auto liability, both primary and excess. We are adapting that to say, look, you can do it per load, you can do it specific to a shipper, you can do it per day, per mile, depending on what best suits your business use case. And we'll customize those rating structures, and we're very risk inclusive, so we accept a lot of the commodities that are being hauled out there as well.
So it sounds like a lot of benefits from that, but let's detail them. What kind of cost savings are we talking about? What are the is it just having coverage exactly when you need it and not buying anything that you don't need? Is that what we're looking at here?
Well, think of it more like pay-per-use coverage, right? So why not just pay for it only when you're using it? We've seen, for example, a case study of what a typical quote for an excess cargo, and I'll stick to that example just because I think it's a little bit more relevant to the audience. But we've seen a quote for an excess cargo at like 250 grand a year, right? And through this, and that's a fixed cost. You're paying your down payment, and you're paying month by month by month. You're just repeating the same payment structure. With usage-based or pay-per-use, what ends up happening is it becomes more of a variable cost as opposed to a fixed cost, right? So let's say March is a heavy hauling month, and December is not so much so. And so what you'll see is that premium charts start to fluctuate a little bit. And we've seen in case studies that we've had with some of our clients right now, they've saved almost 70,000, going from 250 to 180, and even more than that as well.
So what are excess capacity there, or excess freight there? What are some of the other use cases that we're talking about? You said LTL and truckload. I was thinking, when I think of use case or usage-based insurance, I talk about my friend runs a drone company, and he has to get like just specific drone insurance to operate in just a very small area, and it's like it's very expensive, but it's much better than getting this broad coverage that he has. And so that's my only knowledge of usage-based insurance. So I'm trying to make connections here.
Yeah, similar.
But I was just talking.
So we are very focused in trucking and logistics. Our founders and our leadership team comes from some sort of a logistics background, right? So heavy in the freight brokerage space, heavy in the transportation space, and then also a lot of expertise around the insurance space, the commercial auto insurance space. And it's similar to what you're saying. And what we're trying to do is make this completely customer-centric, right? Like, how do we give the most value to the customer that's being insured while still protecting their risk to the best rating ability, and allowing them to save on costs, right? Being comfortable with that. The next step that we've taken on top of that is we recognize that, in terms of the S-curve of innovation in the industry, we're on that very inflection point, meaning we're growing pretty exponentially now as far as technology adoption in the industry, but that's still happening, right? So what we've done is we're able to service this because we're a true insurance agency. I mean, we're the fastest growing through manual reporters, let's say, so you don't need to have a technology system. And on the flip end, let's say you're a very highly advanced 3PL or 4PL, or you're TMS, transportation management system, or a load board, or a digital broker, and you want to integrate this into your workflow within the technology itself. So what we can do is we have an API, we'll plug that in, and you can literally click, get insurance, and honestly, it's as easy as that. I can get into the claims process as well, but that's not as exciting to me, at least. Although we are very efficient with our claims. We do it in a manner that the shippers are always covered. We do it in a manner that is very fast, transparent, and protective.
These are all some of the reasons that I think, at least, that Reliance is one of the fastest growing private insurance companies in the country. Talk to me about what's coming next for Reliance and what the past year has been. It's been a boon for the trucking industry. Has it been the same for the insurance industry and the trucking, focused on trucking? And what are you guys looking forward to over the next few months?
First, let me give you roses. I'm a big fan of your content and everything that you put out. Last year was pretty interesting, obviously. I think we saw a few different things happening in the industry as far as trucking logistics is concerned domestically here. You talk about inventory and the restocking that happens there. Well, that was a very interesting time for inventories last year, and I think that contributed to things. We saw insurance moratoriums and forgiveness last year, especially around March and April. And then we also saw a shift, which I think is a catalyst for longer-term consumer behavior towards e-commerce and online buying. Right? So what ends up happening in the culmination of all these things, and we track the federal data sets to be able to track the capacity in the industry. And as a teaser, we are working on something with you guys. We saw a big boom in the industry as far as the number of authorities that have entered or that did enter last year. Now, what we also saw was that it was more so skewed towards the smaller fleets. So let's say the 1, 2, 3 units that make up the majority of our industry. I think the stat is around 92.8%, 92.7% is 6 trucks or less in the industry. And so we saw massive growth up there. For our 2020, we were lucky enough to where we were and because we were looking at remote work, we were looking at all these things beforehand, able to quickly pivot into the new work from home environment, and then take advantage of the influx in authorities coming into, or trucking companies coming into the US and starting in the US and being able to protect them and insure them. Going forward, I think we'll see some freight cycles play out, which we're starting to prepare for, and I know you've talked about it quite a bit on some of your shows. And all in all, I mean, the goal is always to be customer-centric, add value. So we're spinning up a safety team, and especially with insurance, right? It's all risk. So the better we can help you as a client or an insured, go out and deduct some of your safety risk scores or improve them in general. Set some plans of actions in place to help you improve and bring down your risks and premium. Well, that's what we're doing, and we're investing very, very heavily in those teams in order to add value to our clients and continue to do so over time.
Are you able to speak at all about, you guys have a new office coming in? Are you able to speak about that at all?
Not yet, but
okay.
It comes with the growth. We're growing
right.
so fast that we've had, I think this is the third, maybe even the fourth in about office move in about 4 years.
Wow.
So we're growing fast. And if anyone's interested in insurance, please reach out to us. If you're looking for jobs, please hit us up. we really are growing fast, and we hope to keep doing so.
Yeah, another great Chattanooga freight tech company, freight insurance tech company, focused right here in Chattanooga, growing very fast. A great company. Mr. Sahej Singh from Reliance Partners.